Thanks, Dan. So in today's session, we are going to be covering the tasks needed to create year-end accounts on a receipts and payments basis. Now, if your charity creates accounts on an accruals basis, then we run a separate lunch and learn session for this. If you're not sure which accounting basis your charity has previously used, then you can find your prior year submitted accounts on the Charities Commission website. If you just go to the Charities Commission website, search your charity number, you'll be able to view your prior year accounts. And within those accounts, it should state which accounting basis has been used. Now, unless your charity is a charitable company, and typically, if your annual income is under £250,000, then you're likely to be creating accounts on a receipts and payments basis, which means that you have come to the right session. Receipts and payments based accounts are a simplified form of accounting where money is essentially accounted for based simply on the date it's either received in or paid out of your bank account. And the advantage of receipts and payments accounting is it's much simpler to understand, much easier to create accounts. There's far less disclosures and things that you have to consider and include in your accounts. And it's really pretty straightforward, as you'll see, hopefully, during today's session. So let's look at what we're going to cover in today's session. Firstly, we will cover the key checks and tasks needed before you create accounts, and this is going to be the main focus of this session. We'll also cover how to use the brilliant inbuilt end-of-year report template within ExpensePlus to create accounts. And then in the final section, we're going to talk about what you need to do once you've created your accounts in terms of independent examination, filing your accounts with the Charities Commission, etc. Now, as I talk through the steps needed, if you hear me refer to 2024, then I'm referring to the financial year that we're creating accounts for. If you hear me referring to the prior year, then I'll be referring to 2023. The final thing to mention before we get started is that no two churches and charities are the same. So please do contextualize and customize what we cover today for your organization. So in this first section, we're going to be covering the key checks and tasks needed before you create accounts. Now, in the Zoom chat, you should hopefully be able to see Zoom somewhere on your screen. You should see a little chat. You should see it says a number 1 in it. I've just posted the checklist that we are going to be working through. Now, don't worry if you don't want to download this now or you want to get to this later. We're going to include a link to this checklist in the follow-up email that will follow this recording. So you can always access this checklist later. This is the checklist I'm going to be using, and this is the checklist that we recommend that you use as well. So in terms of creating accounts, if you have been reconciling your transactions during the financial year, as most charities do, then as you'll see today, what we're going to do at year end isn't such a big deal. You've got 10 months after the end of your financial year to file your accounts with Charities Commission, but it's worth accounting for the time that you're going to need to write your trustees report, for your independent examiner to review your accounts, for time for sign off and submission of your accounts as well. So we typically recommend don't leave it to just sort of 5 or 6 weeks before the deadline to submit your accounts before you get started. You're best to get started, say 1 month after the end of your financial year. That will give you plenty of time to make sure you submit your accounts on time. Now, a top tip for you. We've already mentioned that when creating accounts on a receipts and payments basis, it's the date that money comes into or goes out of your bank account that matters in terms of income and expenditure being shown in your accounts. And therefore, for you guys creating accounts on a receipts and payments basis, in the last month of your financial year, you may wish to try and receive money into your bank account that you're owed. For example, submitting gift aid claims, chasing up outstanding customer invoices, etc., to try and make sure that money hits your bank account before your end of year. And also, you might want to also try and pay money out of your account that you owe by encouraging those maybe with 1 month to go that are owed expenses to submit their claims, making sure you pay supplier invoices in a timely way as well, just to try and make sure as much of your income and expenditure does come in or go out of your bank account before year end, and make sure it gets included in your year end accounts. So let's take a look then at the 10 key things that you need to do. We're going to work through this checklist, so hopefully you can see this checklist on screen. This is the checklist we're going to work through. This is the checklist that I've linked to within the Zoom chat, and this is the checklist that you can take away and work through yourselves after this session. So the first check on the checklist, if you're working down the checklist, you'll see the first check is opening balances. And I'm sure you know this already, but your closing balances in terms of your charity's financial position at the end of 1 year those carry forward to become the opening balances for the start of your new financial year. It's therefore important to check that your prior year balances within Expense Plus match your submitted accounts. And so what we're going to do here is I'm just going to move my Zoom toolbar out of the way as it's decided to put itself in the way. So let's just move that here. So what we're going to do for this is we are going to look at our prior year accounts. So here's our assets and liability statement from our prior year accounts for 2023. Remember, we're looking at the prior year to 2024, and we're going to compare that to what we see in Expense Plus. If we come to financial reports, we come to assets and liability statement for 2023. We're trying to make sure that what it says inside Expense Plus, for example, our total cash assets at year end of 2023, we're trying to make sure that that matches what our submitted accounts state. Now, they should match. However, if there are any issues, these are important to fix because, of course, our opening balances for 2024 are important. Now, just to let you know, if you do spot any discrepancies between your accounting software, so Expense Plus, and your prior year accounts for the prior year, which is 2023, then this will typically happen where someone's made adjustments outside of your accounting software when creating your accounts. Now, if you want to know how to avoid this, there's 3 ways you can avoid this from happening in the future. Firstly, is to complete the checklist that we're going to go through today, because if you do that, then the need for any kind of changes by the person creating your accounts during the review stage will be pretty much minimal or zero. Issues often occur because actually accounts are kind of then done outside of Expense Plus. If you follow the checklist we're going to go through today, then all the kind of additions and changes will happen before you then start creating accounts, and that's going to really help you. Secondly, before signing off your accounts, so when you come to sign off your accounts, it's worth doing the check that we just did, making sure that what you're about to sign off matches with Expense Plus. Again, if any additions or changes have been made during the process of kind of signing off or reviewing accounts, you can spot them and you can add them immediately. And then the third thing is to then lock your financial year with an Expense Plus. This is going to prevent accidental changes after your accounts have been signed off. And we're going to cover how to do this later this session, but there's 3 ways that you can kind of avoid there being a discrepancy between your prior year accounts on Expense Plus and your prior year accounts that get submitted to the Charities Commission. Now, it's worth saying that if your prior year wasn't on Expense Plus, obviously we're able to go and have a look at 2023 here because it's on Expense Plus, then you can still do this check. You'll just need to go to the cog icon in the top right-hand corner. You'll need to go to the funds option in here. If you click opening balances, edit opening balances, you'll then be able to see the opening cash balances that you set up. And again, these should mirror what is on your prior year accounts. And you'll also be able to come here and look at your other assets and liabilities. And again, these should mirror what's on your prior year accounts. So it's the same check. You'll just need to go to the fund settings screen to do that check. Let's move on to step number 2 on the checklist, which if you're following along with the checklist is called bank transactions. And for this, we are going to go to the bank reconciliation module, and we are going to select the last month of the last financial year, which is of course December. So Expense Plus is bank statement driven, which means that if you've uploaded your transactions correctly, or better still, connected to open banking for your bank provider, then your balance at the end of 2024 should match with the balance of your actual statement. And you can check this within Expense Plus by selecting the month and checking that these balances match our actual statement. And this is going to be one of the key checks that your independent examiner should do. So it's also one of the key checks you should do, which is why it's towards the start of this checklist. If you set up any payment processor accounts in Expense Plus, then you're also going to need to check that the balances for those accounts within Expense Plus match the actual payment processor balances at year end as well. So the first part of this check is to make sure that we've uploaded all our transactions. The second part of this check is to make sure that we've reconciled all of those transactions. Now, if we look to the right of our bank account here, we can see that we've still got 4 transactions to reconcile. We can click match selected, and what we're doing here is we're checking that none of these transactions are related to 2024, which they're not. And so we're actually okay, even though we haven't finished reconciling, it's not a problem because actually we have finished reconciling the year that we are trying to create accounts for. Here's a top tip. If you have payment processor accounts set up, then you need to be aware that transactions are uploaded for those payment processors like Stripe or Samp or Go Cardless typically after the fact. And so if you're really keen and, you know, today's the 1st of January, you're thinking, I'm going to crack on with this, I can get my accounts done by lunchtime, then it's worth just remembering about that, because actually if you might want to wait a couple of weeks just to make sure that you have indeed uploaded all of your transactions, particularly for your payment processor accounts, and you're not missing income and expenditure for the prior year. Check number 3 then is petty cash. For this, we're going to go to the sidebar menu. We're going to go to our petty cash screen. And this may not be relevant if you don't have petty cash accounts, then you don't need to do this check. But if you do, you need to be coming to your petty cash accounts. You need to be selecting the financial year, and you need to be checking that all of the transactions, petty cash transactions, have been entered. Again, hopefully you've been using this screen as you've been going, and as people have been taking money, putting money in or taking money out of this petty cash tin, they've been recording those transactions. And if they have, then this is going to be really straightforward. If not, you're going to need to add the missing transactions in here. So the first part is to make sure these transactions for this petty cash tin are correct. You'll need to do the same for other petty cash accounts if you have them. The second part of this is to make sure that the petty cash balance stated within ExpensePlus at year end matches with the physical amount of petty cash that was held in this petty cash tin at year end, because of course the two should align. We're going to move through to step number 4 now, which is purchase receipts. And for this check, we're going to go to the sidebar menu, and we're going to go to the receipts screen. And we're going to stop here. So receipts inside ExpensePlus are digital, and you should have been uploading them and checking them as part of your regular financial process flow. At year end, it's really important to make sure all receipts relating to the financial year, which in this case is 2024, have been checked, and none are still showing on this screen. If there are any 2024 receipts showing, which there are, you will need to either upload these, check them, mark them as lost, and then authorize them. But you can't leave receipts relating to the financial year you're trying to close on this screen. So we can see that we've got this particular purchase from 2024 where it's got a receipt uploaded. This just needs to be checked, and so we can just come in here and click accept. We can also see we've got this other one from 2024 which hasn't been provided, and I've got, at this point, I can either go and try and get hold of that receipt and upload it and check it, or I'm going to need to mark it as lost, which I'm going to do here, and then I'm going to need to authorize it as lost as well. And so we've got rid of all of our 2024 receipts on here. So that's the first part. Make sure no receipts are showing relating to the year you're trying to close. Now, the second part of this is now is a really good opportunity to check which receipts haven't been provided, not to upload any additional receipts. And for this, there's a brilliant report, which if you see here, it says view purchases without receipt. We can just click on here. We can select 2024. And this is going to show us all purchases where there isn't a receipt. And for some of these, we might be like, okay, that's an Amazon purchase. I'm sure we can actually get hold of that one. Although it's been marked as lost, I reckon we can get hold of that, and you can get hold of it and you can upload it and attach it here. Alternatively, there'll be purchases like direct debits where the receipt wasn't necessarily required, but you might want to go through and add receipts for anything else that's showing on this screen. Remember that your independent examiner should be checking about lost receipts and checking that your documentation is being provided correctly. And so this is a really great chance for you to actually go through and think, actually, before my independent examiner checks this, actually, why don't we make sure we've got as much of the receipt documentation that we need? And you can just use this report and go ahead and attach receipts or invoices to anything that is outstanding a receipt. Check number 5 then on the checklist is income documentation. So as well as having uploaded documents for purchases, you also need to provide documents for any grants, legacies, or large donations where you have documentation. Your independent examiner is likely to want to see these, so we'd recommend uploading them to the relevant transaction, which is really straightforward to do. The best way to find income transactions that might need documentation is to come to our financial reports here. If you scroll down to the bottom of your transaction reports, you can select the transactions by amount report. We're looking at income transactions, which is great. We're going to select 2024, and this is going to show us the biggest, the largest income transactions first, down to the smallest. So for example, we can see we've got this lottery grant here. We can see that no documentation has been uploaded. We can simply click on this transaction and upload the documentation where we, either the confirmation letter from the lottery or the grant that we submitted. We can upload the documentation so our independent examiner can see what the restrictions were on that documentation. They can see what the income was for, etc. We've got a large donation. If this donor, for example, had sent us an email, or we've got any documentation or a letter from them, again, we can upload that. And so for your largest kind of, for your grants, for your legacies, and any large donations, this is a great chance to upload documentation, and you can find those transactions within this report. Step number 6, then, this is a really important step. If you're like most organizations, then you are going to have been checking your financial reports each month as you go to check that transactions have been recorded correctly. And if you've been doing that, then this check that we're about to go through is not going to take you too long. You're looking in this check to check that transactions have been recorded correctly, specifically that transactions have been recorded to the correct fund. That is of primary concern. Now, remember that for your organization, you've actually chosen which categories to create or which nominal codes to create. So whilst you might be interested in finding a transaction that's been coded to kids work rather than youth work, that is of some benefit. But what we're really trying to do here is to make sure that transactions have been recorded to the correct fund. And this is of primary concern to make sure this has happened. Now, one way you can do this is you can come to bank reconciliation. You can click view statement. You can select the month that you want. We're going to start with May, but obviously you normally start with January. And we can literally work our way through for each of our bank accounts and make sure that each transaction on our bank statement, which is on the left-hand side, where it's been recorded, and make sure that that has been recorded at the right place. You could do that. This is a report that will allow you to do that. Alternatively, you can use the income and expenditure reports with an ExpensePlus, which is what I'm going to take you through. This is a slightly more speedy and more efficient way to look out for the things that you need to be looking out for. And there's 4 things that I want you to look for that I'm going to take us through. And these are the things that you should be checking, particularly when making sure transactions have been recorded correctly. So we're going to go to our financial reports. We're going to go to our summary by fund. We're going to select 2024, and we're going to start with our unrestricted general fund. The first thing we're going to look for is any transactions that have not been properly coded. And what I mean by that is if you've got a category called other, either other income or other expenditure, or if you've got a category in this case called to be recoded, we're just checking that there's nothing been left in that category in the financial year we're trying to close off. So look, we've got a category here called other to be recoded. That's okay as we go through the financial year. We might have put a few things in there because we weren't quite sure where they needed to go. But at year end, one of the checks you need to be making sure when you're checking transactions been recorded correctly is that kind of nothing's left in this category. So we need to be clicking into here. We need to be going, moving this transaction, in this case, adding a better description. So the first check is make sure that actually you've recorded everything. You haven't just left things parked in other or to be recoded. The second check is to make sure that no restricted income has been recorded to an unrestricted fund. So again, general fund, this is our unrestricted funds. We want to check that no restricted income has been recorded to this fund. Now, categories you want to be looking out for are things like categories called grants. Typically, you shouldn't really have a category called grants in your general fund because most grants are restricted, as in you apply for them and there's a restriction on the grant. If that's the case, then you need to be going to create a separate fund, a restricted fund for this grant, maybe this big lottery grant or whatever it might be, and then recording the income to that fund and obviously any expenditure against that restricted income out of that fund. So you need to look out for categories called grants. You also need to look out for categories like this called Red Cross Appeal. This sounds restricted, right? It sounds like income that comes into this category possibly was for money that's going to then be given to the Red Cross. Again, that money is restricted by nature. You can't just spend it on anything you like. It has to be used in the way it was given. And so again, this is suspicious. Again, this really shouldn't have a category in our general fund. And so this is a chance to say, oh, actually, this is restricted income. This is the wrong fund for it to get recorded into and out of. I'm going to move that. So check number 2, make sure restricted income hasn't been recorded into an unrestricted or designated fund. Check number 3 as part of this is to make sure that expenditure out of a restricted fund is in line with what the money was given for. And for this check, we are going to go back to our financial reports and we're going to go to transactions by fund. And we are going to select, in this example, our building project, and we're going to come to our 2024 year. We can see the income up here, but what we're going to look at here is the expenditure. Now, obviously, you need to know what this restricted fund relates to, but for the sake of this kind of session, we're going to pretend this relates to building work that's going to be done on our building. So we are making sure that all of the expenditure that has been coded to this fund is allowable within the restriction of this fund. And very quickly, we spot this Zoom license. Now, this looks like it's been a miscode. Why are we recording a Zoom license to come to this restricted fund? So we're going to have a look at that and make sure that it has indeed been recorded correctly, or maybe it needs to be reallocated to a different fund. And so this one is checking, check 3 is making sure that you haven't wrongly recorded recorded into your restricted fund money that really can't be covered under the restriction of the grant or the income that there is. And number 4, in terms of looking for transactions that have been coded wrongly, is to make sure that any expenditure that can be covered by a restricted fund hasn't been recorded to our unrestricted fund. And so for this, we are going to go back to our financial reports. We're going to look at our unrestricted fund, which is our general fund, and we're having a look down here to make sure that none of our grants can cover this expenditure. Remember, we've got a restricted fund for food bank. We've also got a restricted fund for building work. And so we're asking ourselves as we look through here, is there any money that might relate to expenditure that might relate to food bank or to a building which has been recorded to our unrestricted general fund? But really, the grant or whatever money was given for that restricted purpose should be paying for this instead. And again, if we look in here in our general fund, we can see that there's £2,000 here. We're going to have a look. Yep, it's for a new porch roof. So the question here is, this has been recorded to our general fund, but hang on a minute, we've got a building project fund. Can that building project fund cover this expenditure? If so, we want to recode it so it's getting paid for by that restricted fund, not by our general fund. So hopefully that makes sense. There's a few things that you need to be checking out for in particular when checking that transactions have been recorded correctly. Remember that the fund a transaction is recorded to is of primary concern, and so you need to be making sure that the restricted income hasn't been coded to an unrestricted fund, and that restricted funds essentially are being used in the way that they should be, and that restricted funds are used to pay for things where they can, rather than for your general fund to be paying for things where a restricted fund could be paying for it. Okay, that's check number 6. Let's move on to check number 7, which is category transfers. So if you've added any category transfers, they will have been added in the adjustment screen. So if we come down to adjustments and we click category transfers, we select the financial year 2024. We're looking to see that any category transfers that have been added correctly in here. We don't have any, which might raise the question, should we be adding any? And the answer to that might well be no, in which case we've done this check brilliantly. Now, category transfers within ExpensePlus are really good because ExpensePlus prevents you from coding a category transfer out of an expenditure category and into an income category. And it's very possible that you might have found this quite frustrating. You've been like, well, I want my general fund kids expenditure category to kind of show us money going out, and I want my income category in this other place to show us the money coming in. And you may have got a little bit frustrated by the fact that you can't do that, but there's a good reason why you can't do that in ExpensePlus, because if you create a category transfer out of an expenditure category into an income category, what you actually end up doing is overinflating your organization's income and expenditure in your year-end accounts, which you shouldn't do, which is why ExpensePlus makes you do transfers as either income to minus income or expenditure to minus expenditure, to avoid the overall income and expenditure of your charity from being changed. If you want to find out more about category transfers, we're not going to cover it in more detail now, but if you just click the blue help icon in the top right-hand corner of the screen, search category transfers within our support guide. There's some brilliant guidance on how to add category transfers. And if you want to find out more, you can also click send us a message and our support team will come back to you. Check number 8 then is fund transfers. Again, we're inside the adjustment screen. This time we're going to click on fund transfers here. We're going to select 2024. And again, we're just checking that any fund transfers that have been added correctly. For example, your trustees might have decided they wanted to increase your reserves by £5,000, in which case this type of fund transfer is exactly what you need. Money going out of your general fund into your reserves fund, £5,000. That is showing the fact that £5,000 more is being set aside, and that's brilliant. We're okay with that having been added. Remember, as you look at your fund transfers, that typically money should not be being transferred out of a restricted fund. That is not typically okay, and so do watch out for that. If you spot any transfers out of a restricted fund, then you need to ask the question, is this correct? Check number 9, or step number 9 then, is additional assets and liabilities. And for this, we are going to go to our financial reports and we're going to go to our asset and liability statement, which is one of these reports on the right-hand side here. We're going to select 2024 and let me talk you through this. So in your year-end accounts, in addition to the cash balances that your church or charity has, you also get the chance to state any other assets and liabilities, and that's done within this assets and liabilities statement. For example, it might include assets that your charity owns, such as a building or a minibus or an AV system, or it might include money that is owed to your charity, like gift aid from HMRC. Equally, it might include money that you owe to others, such as money to HMRC for PAYE, or a loan that you owe out of your charity. So this is your assets and liabilities statement, and it's worth noting that you're simply stating at year end, hang on a minute, as well as my cash, I also have these other things. This works really differently, and don't get this confused with accruals accounting. By adding in an asset or a liability balance in here, it's not going to appear as income or expenditure inside your accounts as it would on an accruals basis. It's simply you getting to say, look, at this point in time, before you just take as read that I have this amount of cash assets, I also want to tell you that I have these other assets and also these other liabilities. And so it's a point in time thing, and it works really different to accruals accounting. Hopefully what I've said makes sense. If we just have a look at this, we can see that as well as our cash assets here, which pull through automatically, someone has added that we've got gift aid owed from HMRC for 2.3k. We come down here, we see, yeah, we've got a building in here that someone's added for 50,000. We've got a computer and IT equipment for 1,000. Yep, we owe HMRC 500 quid, and yep, we owe our independent examiner, once they finish their independent examiner, 600 quid relating to this independent examination. So you're getting to state at year end what your assets and liabilities are, and so that's a one-time shot thing. Now, before you spend loads and loads of time on doing this, it's worth remembering the principle of materiality within creating accounts, which means you don't need to spend lots of time adding up the £3.45 you owe to Bob Jones at year end, and you don't need to try and work out what the value of the 7-year-old laptop in your office is to make sure you add that in here. Your focus needs to be on the key assets and liabilities that need adding. And it's worth bearing in mind that for many charities, that means nothing needs adding to this report. If you're not sure, you should speak to your independent examiner. You don't need to spend hours doing this. You just need to make sure your key assets and liabilities have been added within your assets and liability statement, and to ask advice if you are not sure. So we've done 9 of the 10 checks that are on the checklist if you're following through the checklist. The final check is to make sure that we're happy with our closing balances for the year in question, which is 2024, because we need to remember that once we've signed off our 2024 accounts, we can't just go back and start making changes. So it's really important that we've checked that our closing balances are correct. So as well as checking that you're happy with this assets liability statement, that's part of it, we're going to finish off our review by using a report called the Fund Movement Summary. And for that, we're going to go to the sidebar menu, Finance Reports, Fund Movement Summary, and we are going to select 2024. Here's some top tips then. So where a restricted fund has little or no expenditure, you want to be checking as you're doing this final review that you've definitely done this correctly. So we're looking here at our food bank fund. Now we're only seeing £63.71 of expenditure, which begs the question, have we coded our expenditure for the food bank fund correctly, or is it hidden up here inside our unrestricted fund where actually we needed to, remember, make sure that our restricted fund pays that expenditure? Or did the food bank pause for a while during the 2024 financial year and genuinely there isn't more expenditure? So do take note of any funds that have very little or no expenditure, just to ask the question, is that correct, or is something else I need to go back and look at? Where a restricted fund balance is running low, then you might need to think about what you're going to do in the future for that. So if you've got a restrictive fund that's kind of, spending £2,000 a month and it's only got 3,000 left in it, you probably want to be asking the question, what am I going to do when that fund runs out? Maybe you need to be applying for more grant income, for example, or maybe you need to be thinking, okay, well, when the grant runs out, our general fund is going to cover the expenditure. So it's worth, again, just thinking about any restrictive funds that are running low in terms of what you're going to do in the future. Note that fund balances typically shouldn't be negative. So if you have a negative fund balance, as you're looking at this, then chances are you need to either recode some of that expenditure to another fund. For example, your general fund, you've overspent the money. For example, the grant was for 5,000. You've allocated £7,000 worth of expenditure to it, and you're going to need to recode 2,000 of that to your general fund or to another fund that can cover the expenditure. Or you're going to need to do a fund-to-fund transfer just to get that balance back to zero. And so, yeah, if you're not sure, again, speak to your independent examiner, but typically fund balances shouldn't be negative. The other thing to mention, that if you have a fund that is a restricted fund, but the balance isn't zero and there's no further expenditure expected, then again, you should speak to your independent examiner or the Charities Commission about that. Where money is restricted, you can't just think, okay, we're not doing that project anymore. I'm just going to recycle the money and use it for something else. You're not allowed to do that in fund accounting. And so again, you probably just want to seek advice. This is one of the reasons that I've already mentioned, that at the end of year, you should always make sure as much expenditure as possible and allowable within the restrictions of the restricted fund should be coded to the restricted fund. Otherwise, you could end up with a problem sort of several years down the line where you're not actually spending money out of that restricted fund anymore. And the fact that you've used your general fund money to pay for it originally, actually, that's going to cause you a bit of a problem. So you typically want to make sure that your restricted funds essentially are the first place to go when you're trying to pay for expenditure where it's allowable within the restriction of that fund. Okay, so hopefully that makes sense. We're just checking that we're happy with our fund balances, and we're using the fund movement report just to help us and nudge some of those questions just to make sure that we're happy with where our fund balances got to at the end of the financial year. So we've completed part one, which is checking our 10 checks to make sure that we're happy prior to creating our accounts, that everything is as it should be. And now we're going to look at the brilliant end of year reporting template in ExpensePlus to look at how we can actually use this to create accounts. Now, it's worth noting that if you don't wish to create accounts yourself, or you don't feel confident creating accounts, then you could speak to your independent examiner to see if they have an option where you can kind of pay them a bit more and they'll create your accounts for you using the data inside ExpensePlus. However, as you're about to see, creating accounts using the template in ExpensePlus is fairly straightforward. So hopefully you will feel able to do this. So let's go down to where we need to go, which is our year-end accounts within the sidebar menu. We're going to select our 2024 financial year. You're going to see that there's a contents page on here. You'll then see that there's some other tabs across the top. We're going to work through these. They're really straightforward to do. You'll find that many of the fields have either been pre-populated for you, or if you bring up last year's accounts, the year before's accounts, you'll actually find that quite a lot of the detail will just be literally copy and paste from your prior year accounts. And so you're not having to reinvent the wheel each time. You should be able to get the data that you need without having to think too hard. So let's look at the legal and admin tab. This is literally just the basic charitable details that you need to enter and your trustee details in here. We've got our trustees report tab. Lots of this can be copied from your prior year. Like, it's unlikely that your charitable objectives are going to change from when you last wrote your year-end report. And so again, you can just be copying and pasting that across. Your summary of your activities and achievements. Yes, this is going to probably be slightly different because you probably did something slightly different in 2024 to what you did in 2023. But again, lots of it can probably be reused because actually lots of it will be the same. And so again, it's up to you as to how much time and effort you're going to put into kind of writing your charity report. It is worth noting, though, that the report that you create, this is where grant funders will look. They'll go to the Charities Commission website. They will be able to see what you've written in your prior year accounts. And so yeah, it's probably worth considering what is it you want to share about your charity for example, a grant funder to be able to see. You've got financial review where you can write a short financial review. You can also write if you've got any funds in deficit, why that was and what's happening. If you've got a reserves policy, which you should have, you can just state what that is. Again, you could be copying this typically from your prior year accounts. Independent examiner's report. This is just default text that your independent examiner is going to want on their page of the report. You can edit it, but typically you don't need to. You just add your independent examiner's details in here. The receipts and payments tab within this report, this is pulling from ExpensePlus. So you're not having to go and find the data and copy and paste it in. It's doing all of that for you, and it's rounding to the nearest pound, which it should do in your year-end accounts. It's worth saying that if you come to this screen and you've been using ExpensePlus for a while, you may see a warning box at the top of the screen. This is simply telling you that when you first set up your categories in ExpensePlus, that you set up your category types, which are, for example, donations and legacies, charitable activities. You set those up correctly, but at that point in time, we didn't have the concept of these kind of like subtypes. ExpensePlus may well ask you to go and add subtypes for your category. If you see that warning, if you just follow the instructions, you'll need to do that, and that will just mean that this report displays correctly for you. Whilst we're talking about this report, it's worth saying that these default types that you see inside the receipts and payments statement are editable. So if you're looking at this thinking, oh, that's lovely, but that isn't how we reported last year, that isn't how we broke down our income and expenditure last year, and we want to copy what we did last year, and we want to tweak this, then you can do. If you just come to settings up here in the right hand corner, you come to income and expenditure categories, edit category types in here. This is where you can edit the kind of the structure of what we're just looking at. Typically you won't need to do this, but if you want to add in a new kind of subtype in here, if you want to change anything, then you can do this, and that's going to directly affect this report. Obviously you need to go and potentially edit the categories that are associated with that type as well, but this will pull through correctly for you. Assets and liability statement in here. So again, this is the same assets and liability statement that we looked at in step number 9. It's just pulled through into this report. It's showing your cash assets plus any other assets and liabilities that you stated for the year in question. Then you've got a notes tab, which is the final tab where you get to state your accounting policies, whether there are any related party transactions. It pulls through your fund movement of funds summary, and you can add any other optional notes in here as well. It's worth mentioning that we've got help guide articles, which will help you if you do have questions, or you can go to your independent examiner, which is a great source of information typically, and or look at your prior year accounts, which should have the answers to most of these kind of disclosures that are needed as well. I'm just going to check my notes on this section just to check that I haven't missed anything. There's one thing that I wanted to mention. If this is your first financial year inside ExpensePlus, so I'm going to change to 2023 just temporarily to show you this. If this is the first financial year in ExpensePlus, then within your assets and liability statement, this prior year column is pulling through from what you set up when you entered your opening fund balances. So if this is not correct in your assets and liability statement, it means you need to go to settings, you need to go to funds, you need to go to opening balances, edit opening balances, and this is where you got to state what those things were at the start. So if you're in your first financial year, that's the place to go if your assets and liabilities are incorrect. If you're in your first financial year, again, if you're inside the receipts and payments statement, you'll see that it may well have this warning for you at the top of the screen. If you click this button, it basically asks you to state from your prior year, the one that was outside ExpensePlus, what the breakdown of your receipts, i.e. your income, and your payments were, because of course ExpensePlus doesn't know that because you're outside of ExpensePlus. So there are two things just to bear in mind if this is your first financial year. Otherwise, you don't need to look at these. These will just generate automatically and populate automatically as well. Okay, so once we have done, so let's pretend we've finished creating our accounts. We're going to go back to year-end accounts on here. We're going to go back to 2024. Once you're done, you can download your accounts either as PDF, or you can download them in a Word document format, and you can add any other formatting or anything else you want to do. If you want to insert some pictures or whatever you want to do, you can do that. And so you've got these download options to download the reports that you need. Now you're done with creating your accounts, now is the time to lock your financial years within ExpensePlus. If you don't do this, then you could easily end up with someone before you come to do your 2025 financial year nipping on there and making some changes and adding some expenditure to a prior year. So we highly recommend that you lock your financial year. I'm going to explain how to do this now. Firstly, we want to lock our opening balances. So if this hasn't already been done, if we come to funds and we come to opening balances, there's a button here called lock opening balances. We're going to do that because we don't want our opening balances changing. Until we've locked our opening balances, we can't lock the different financial years within ExpensePlus. It's worth noting that you can unlock your opening balances just by clicking the unlock button. What is stopping you doing is having a really bad day, I don't know, adding a new fund in and just accidentally giving it an opening balance back from 2023 whenever you started. And you don't want to do that. So by locking them, it's just stopping you from making mistakes. Then within settings, if we go to our system settings, which is the bottom of the kind of settings menu here, we can see our financial years. If we click the edit button here, we can first of all go and lock our 2023 financial year, which is going to stop anyone from changing any transactions in 2023 or adding any new ones. And now we can also lock our 2024 financial year by clicking that button. And now no one can make changes to what we've done. Again, if we need to change it because we realized during the review stage that we forgot to add something in, then we can come and unlock it again. But what this is stopping us doing is having a bad day, entering a purchase tomorrow for December 2024, and suddenly some petty cash purchase for 2024, and suddenly our account's changing. It's going to stop that happening if you have locked your financial years in there. Okay, I think Dan is going to share the next slide that we're going to look at. So we're going to move on to section 3, which is what we do once we have created accounts. Let me just have a look at this. I can't actually see if Dan has shared Dan, do you want to just nip on and let me know if you shared the screen?
Yes, yeah, the screen share showing.
Great, perfect. Okay, so we're going to talk about what to do once you have created accounts. So there are three things that we're going to cover. We're going to cover independent examination. We are also going to cover kind of the review and sign-off process, and then we're going to talk about submitting your accounts to Charities Commission as well. So you'll need your accounts independently examined if your charitable income is over £25,000 before your accounts can be submitted to the Charities Commission. Now, independent examiners must be independent, funnily enough, and they must have the necessary skills and experience to independently examine your accounts. So they can't, for example, be a trustee, an employee, a beneficiary, a major donor, involved in the running of your charity, or related to someone that is any of those things. So they need to be independent. They can't be kind of intrinsically connected to your charity. In terms of the skills and experience they need, the Charities Commission recommends that if your income is over £100,000, then the independent examiner, it would be preferable if they had a qualification in either charity finance or they're a qualified accountant. For charities actually over £250,000, which will not be applicable for you guys, then they must have those things. But that won't be applicable because if your income is over £250,000, then actually you shouldn't be creating receipts and payments accounts. Now, it's worth bearing in mind that just because someone is an accountant, and they may be a brilliant accountant and have loads of experience creating accounts for businesses, that does not mean that they have the skills and experience needed for charity accounting. And what we see is that this can be really problematic, with some independent examiners missing really basic fund accounting mistakes and not being able to correctly advise charities when fund accounting questions come up. And so if your independent examiner is an accountant, it's probably worth you just checking that they do understand fund accounting, because it's not necessarily the case that they do. Another issue that we see is charities paying far too much for the independent examination. And if you think this might be the case for your charity, then it's worth getting quotes from, say, 2 or 3 different independent examiners. Remember, your charity trustees are free to choose your independent examiner. So if your independent examiner is being difficult, if they don't have the right level of skills, if they're charging you too much, or they're making you send them reams of data that they could just access from inside ExpensePlus, then remember it's your charity's choice as to who your independent examiners are. Now, we don't get paid for recommending any independent examiners, but if you are struggling and you want to kind of know where to go, where can I look for to get a couple of quotes for independent examination, then we'd recommend to you a company called Wyatt & Co. We'd also recommend to you, if you're a church or a Christian charity, Stewardship. They're both brilliant companies that provide independent examination, but more than that, they understand fund accounting. They're brilliant at answering questions. They also have knowledge of ExpensePlus, and so do check them out if either are relevant. In terms of giving your independent examiner access, let me just screen share this bit. I think hopefully that's switched back to my screen. If it hasn't, then Dan will stop screen sharing and hopefully it will switch back in a moment. In terms of giving your independent examiner access to ExpensePlus, if you come to the settings menu here and you click on users, then you can add your independent examiner by clicking add new. You can add their name, their email, give them the role of independent examiner, which will give them read-only access to ExpensePlus. Click submit, and this will send them an email which will allow them to be able to come and see and download any data that they need from inside your system. If you do use Wyatt & Co. or Stewardship, it's worth actually noting that for those guys, you can come to system settings and you can actually set your independent examiner in here, which will actually give their team access to your account and allow them to select the appropriate person that's going to do the independent examiner themselves. So there's a couple of options in there. If your independent examiner tries to make you send all the reports they need manually to kind of create accounts, then you, again, this should really raise the question, are they the right independent examiner? Independent examiners should be happy if you just give them access to ExpensePlus. Then they can go and check the receipts they want to check. They can download the reports they want to look at. They can look at kind of who approved purchases. They can do all of that inside of ExpensePlus. And so at year end, it should be really straightforward. It is, however, worth bearing in mind that your independent examiner will need some extra information. For example, they're likely to want PDF copies of your bank statements so they can check that the bank balances match up with ExpensePlus, and that's perfectly normal, and they should be asking for that. It's also worth bearing in mind that independent examination, whilst typically quick, because it's not a full audit, it's just an independent examination, it's worth bearing in mind that your independent examiner, particularly if they are good, are going to have lots of different charities asking them all at the same time to do independent examinations. So one, it's worth making sure that you create accounts in a timely way, and two, it's worth not leaving it right to the deadline before you ask them. Now, your independent examiner may come back with a list of questions, having looked at your accounts. For example, they might spot that one of your trustees is incorrectly listed. Maybe it's on your year-end accounts, but the Charities Commission doesn't have them listed, or they might ask about a particularly related party transaction that they want to ask about, or maybe they want to ask a little bit more about your internal financial controls. This is good and this is normal. It's a sign that your independent examiner is doing a proper job of independently examining your accounts. Remember, they are your safeguard. They are your trustees' kind of security that things have been done right. And so you want a good examiner who is going to ask the questions that they should be asking. So we're going to talk about sign off of your accounts. So once your accounts have been independently examined, you'll need to circulate your accounts to the rest of your trustees. And once your accounts have been agreed by your trustees, which typically is done in a kind of trustees meeting, and written into the minutes that they've been agreed, then one of your trustees needs to sign off the accounts on behalf of the other trustees. As soon as this is done, then your independent examiner has signed your accounts as well. Then you're ready to submit them to the Charities Commission. So finally, before we take questions, in terms of submitting accounts to the Charities Commission, this is done via the Charities Commission portal if you haven't done it before. Once you have access to the portal, it's really straightforward in terms of uploading your accounts to the portal. If you don't have access to the portal, now's the time to ask the question, how do I get access, rather than the night before you're trying to submit accounts. It's worth you following that up. Whilst uploading your accounts document is very straightforward, as I've just mentioned, you should be aware that Charities Commission will also ask you for lots of other bits of information at the point of submitting, from the largest donation given to your charity. They'll also ask you what the largest gift your charity has given. There's loads of questions that they ask you, and so do just be prepared for that. Uploading your accounts is simple, but Charities Commission takes the chance to ask you other things. In terms of how do you get the answers to the other things that they're going to ask you, there's a brilliant help guide article inside ExpensePlus called Finding Answers to Charity Commissions Annual Return Submission Questions. And this takes you through the places that you can find answers to some of those kind of key questions without spending loads and loads of time trying to search for information inside ExpensePlus. So we're nearly at the end of today's session. We've covered the key checks and tasks needed before creating accounts, the 10 key checks on that checklist. We've talked about how to create accounts within ExpensePlus. We've also just briefly mentioned at the end there what to do once you've created accounts. I hope you found the session really helpful. If you have any questions, please do pop them in the Zoom chat. I'm about to hand back to Dan. And yeah, now is the time to move on to the Q&A. We won't record this part of the session. Thank you for sticking with me. I hope this has been helpful. Over to you, Dan, for the Q&A.